Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have attorney James Schmidt. James worked as a CPA in both the audit and tax fields for 8 years prior to practicing law and launching his law firm in 2008 in Tampa, Florida. He advises U.S. and non-U.S. individuals and entities and represents developers, buyers, and sellers in both commercial and residential property transactions. He specializes in assisting clients that require both real estate advice and tax advice from the same counsel. So thank you so much for being on the show, James.
Hey, thank you, Charles.
It's great to have you here, and it's great to have a CPA and also an attorney in one, which is kind of a unique thing to have. So I briefly touched on your background. Can you expand a little bit more on your background prior to starting your law firm currently?
Yeah, sure. I'm really excited to be on the show. Thank you for the invitation. I guess I should mention Dan Pepper. He's a good friend and a client of mine, and I understand he's a good friend of yours, and he put us in contact, and he's someone who is very knowledgeable here in West Central Florida about mostly the multifamily market, I think.
Yeah, Dan's a great guy. He's a great property manager. I think his partner Josh is actually speaking at our January Tampa meetup for property management at our multifamily meetup there. So
Josh is a good guy as well, and I know both of them really well. And so thank you to Dan for the introduction. And so I guess a little bit about myself. I think anybody who's in the practice of law brings some sort of personal experience with them, and that personal experience really colors and really sort of colors what sort of attorney they are. Some people are drawn to the fight, and they tend to get involved in the disputes and the litigations. Other people tend to be more they're drawn to the deal, and they love trying to figure stuff out, and they tend to be sort of more the transactional attorneys. I kind of went out on in a different direction when I was in college, and I studied accounting, and I'm getting my CPA designation and all of that. And that proved to be very educational, and I enjoyed accounting, but for me, it just didn't have it wasn't that exciting for me, and I'm really a deal guy, and I grew up in an entrepreneurial household, and I'm just going to be a transactional lawyer. And this was around 2000, like sort of late 2007. And what I didn't realize was that, the world had turned itself upside down, and there was a group of lawyers that had sort of broken off from, some of the really top elite law firms in town and had started their own firm. And, we just sort of by matter of coincidence ended up meeting, and they had some extra office space, and we put it all together, and they kind of liked the idea of having an associate that they didn't have to pay for, and I like the idea of not going to have to work for one of these big giant law firms and just getting beat up for a couple of years. When I consider the fact that 10 years have gone by since then, and there's a lot of people in the market who, they weren't even in the market 10 or 11 or 12 years ago, or they weren't in the market 13 or 14 or 15 years ago when we were going through, the bubble and the big real estate run up.
Yeah, it's definitely a different market than where you started. That's for sure. And a lot of new players. That's great to have that, an awesome starting point there. And obviously they weren't doing much real estate at that point, and you've changed into doing more transactional real estate along with your tax advising. So I want to transition to a couple different questions that we have normally with new real estate investors, specifically like, so if we're coaching or we're doing a meetup, and new real estate investors always come to us, and there's never a black and white kind of law thing, I guess, when you're talking to people, especially when it comes to like corporations and entities. So if a new real estate investor came to you, where would be the difference between LLC versus an S corp? If they're just doing their own incorporation, why would one use one over the other?
The way I look at it is it's really this sort of this trajectory. Okay. Whereas, we started off, hundreds of years ago with this concept of an agent and a principal, right? You have the principal, you'd hire agent, your agent could go do things for you. And there was sort of some sort of connections there with liability and fiduciary duties. From there, we kind of had this idea of a partnership, right? We have a bunch of people that come together and everybody's sort of the agent of everybody else. And any one person can create liability for everybody else. That's a general partnership. And then after that, we had the idea of a limited partnership, right? Where you're going to have a bunch of people. We're still, all these concepts originated, hundreds of years ago. With the limited partnership, you've got the idea of, a bunch of people who have really very limited risk and one person who has unlimited risk. Okay. And then, kind of independent of that, sort of completely separate, we kind of lump all this stuff together right now, but really totally separate from that, later was this idea of a charter or a corporation. It was a completely different idea. And that idea was, we're going to get a bunch of people together. They're all going to put some money in and no one's going to have any liability for what happened. Okay. And, I'm from Wilmington, Delaware, and I went to Widener University Law School, and right on the side of the road there where Widener is kind of situated between, sort of between Wilmington and, Philadelphia and Gap, Pennsylvania, and Lancaster, where there was a lot of trade and a lot of travel sort of early in the history of the United States. There's this big marker, and it talks about the toll road that had been created. They were going to build this toll road. Well, the idea behind the toll road was we were going to get a bunch of investors together. They were going to build a road from A to B, right? They were going to put up the capital. People were going to have to pay to use the road. And, they were going to collect some kind of profit or some sort of return. But if there was an accident, none of those investors would be responsible. Yeah. So that's the corporation. So you had these kind of two separate concepts, the partnership and the corporation. Before I was born, or, just before I was born, Congress made this thing called the S corporation, which was sort of a modification of the corporation. It was still a corporation, but for tax purposes, the income and the gain would pass through. And then sort of in the late 80s, if I've got my dates right, some energy investors was Wyoming. They said, well, we want to create a completely new thing, okay, where it really behaves like a partnership, okay, in terms of its tax treatment and its flexibility and sort of the rights and duties of the beneficial owners and the rights of third parties against the entity. We want to take all of that and we want to add this corporate idea, which was there would be limited liability for everybody. And the IRS said, absolutely not. We're not buying it. And we're going to recognize this thing as a corporation. This was the LLC, the limited liability company. And the limited liability company sat around for like 10 or 15 years through successive U.S. presidential administrations until an administration came to power that said, instructed the Treasury to bless this thing and to give it partnership tax treatment. I want to say that was like probably early 90s or something like that. Okay. So when that happened, you had the LLC, which was the best of both worlds. You had all these wonderful benefits of the partnership, but you had limited liability for all the beneficial stakeholders. Well, that was the beginning of a new era. And from that day forward, LLCs have been sort of the preferred entity, if you will. So, really every business that's created these days is now essentially created as an LLC. unless you fit into, some of these other smaller categories where, because of the nature of the transaction, a partnership is desired, or because of the nature of the transaction where it's going to be a publicly traded company or something like that, a corporation is required. So when I create an LLC, I've created an entity which has all the best attributes and characteristics that you could ever desire for an entity for the most part. And then from a tax point of view, I'm not even committed at that point as to how it's going to be taxed.
Yeah. S Corp or
I send a form into the IRS and I tell the IRS, this is how I want my LLC to be taxed: as a partnership, as a corporation, as an S corporation, or even as a disregarded entity, which means it's going to exist under the law of the state in which it was organized, Florida, Delaware, California, New York, wherever. But for federal income tax purposes, it's non-existent. We don't even look at it. So, we could spend, 8 hours in it, but the short version is usually 95% of the time, you'll start with an LLC and you'll kind of go from there.
Yeah. Most of the people listening are going to be long-term investors. Rental income kind of is their main goal. So if I'm speaking to them at a very broad overview in 30 seconds, how my accountant explained it to me was that, LLCs for long-term passive income, and you want at some point being done as an S Corp if it's more active, like flipping or properties like that.
LLCs, if they elect, can be taxed as partnerships, which generally speaking for real estate, you always want to be taxed as a partnership. There's tax benefits if you're contributing assets, hard assets like real property to a partnership, saying you're doing a deal and one guy's bringing the land. He puts the land in, somebody else is bringing something else, money, capital, services, et cetera. The contribution of the land is a non-taxable event. Okay. With an S corporation, you would have a different outcome. You have the same kind of situation with distribution, or probably more, more significant. If you distributed some of the land, and it happens all the time. You have a partnership, and you say, we're going to distribute some of the land. We're going to give, we're going to distribute some of the out parcels, to the members, or to another entity that's going to then develop the property. Those are non-taxable events. If you distribute real estate in a corporation or an S corporation, those are taxable events. So you're not generating any revenue at that point, right? Because you haven't built anything, you haven't sold anything, you're not collecting any rents. You don't want to pay tax. So, but if you're under the corporation rules or the S corporation rules, you've got taxable events, which is complicated stuff that you don't want to deal with. Under the partnership rules, it's easy peasy. There's no tax. So if you're an operating entity, say you're a property manager, okay, you're collecting fees for your property management services. You're not dealing with, real property, okay, per se. You don't have, on your balance sheet, you don't have, actual real property. You just got service agreements with all your clients, and you're involved in the property management business, or you're involved in any business for that matter. You're in the podcasting business, you're in the lawyer business, you're in the financial services business, or any kind of business. As an S corp, it's really no great. It's not a secret that the default is, the income that passes through an S corp is not subject to any sort of payroll or FICA or self-employment tax or any of that stuff. Okay. So what you're stuck with as an owner of an S corp is you have to declare to the IRS what portion of your income is related to your so your active involvement, if you will, or what's your earned income. When I first started, I'd see guys with W-2s, they had hundreds of $1,000s coming through their S corp, and they gave themselves a $5,000 W-2. It's like, but you get to set that number. Now if you set your number too low, you're asking for trouble, because the standard is, ordinary and reasonable, which is, a gray area, but you've got to set that standard. But so for an operating business, an S corp might be more might be more desirable.
Yeah.
Okay. So corporations aren't going, but what you can do is you can set your LLC up, and under the check the box elections, elect to be treated as an S corp. So still, as a starting point, an LLC is often the preferable starting point, unless you know for a fact. I have clients who come in and they say, listen, it's a tech company and we're definitely trying to take this thing public. That's where we're headed with this. Then, instead of doing an LLC and check the box to be treated as whatever, we might say, well, let's open this thing up as a corporation. Yeah. On day one, we want this whole thing organized in a format where we could eventually take it public. I don't do any real public company work per se, but I do help people with exempt offerings. Where we're setting the entity up in the beginning. We've got the subscription agreement. We're taking in capital,
Yeah, we do a lot of that with our real estate syndications. So we have whatever the exemption 506B is the one we usually use, 506C sometimes as well. But 506B is what we normally will do with our investors. So yeah, that's it's very interesting with the S corp. It's that's what he tells me. He's like, you gotta this, and then this distribution. So you gotta you can't get too greedy. You just have to be everything has to be reasonable of what you're getting paid and so forth.
Yeah.
But
it sounds like you've been consulting with your CPA.
For years back, because I've done the same thing. I have LLCs that are S corps. I have S corps for different stuff for property management stuff. So all types of stuff with that. But all of our properties are held in LLCs. Yep. The only time I've heard differently would be we don't have any Canadian investors right now or anything currently, but that's always done as an LP. So because of the tax treaty, going back to what you were saying in the 80s, LLC was after that.
Some of the, there was this epiphany, if you will, where the Department of the Treasury granted partnership tax treatment for the LLC, but a lot of countries, in order to grant partnership tax treatment, just sort of partnership, accounting tax treatment, if you will, granted that varies from country to country, but the idea of just passing that income through without taxing it at a corporate level, in order for a lot of countries, before they grant that, they want at least one person to be a general partner. And that's just not what you have in an LLC. We kind of leapfrogged past that. So we had a transaction come up in my office a couple years ago where instead of selling the assets, we ended up selling the company so that we didn't have that sort of pass through income it was a Canadian, we'll call him the owner, if you will, the beneficiary, the stakeholder. And if we had done an asset sale, the proceeds from the transaction would have flowed through the entity, and there would have been 2 layers of tax. Okay. And that's in addition to dealing with US and Canadian sort of tax issues and credits. So what we ended up doing was we sold the company. And that was harder for some buyers to wrap their head around. Why am I going to buy the company when I just want your real estate, and your real estate is the only thing in the company? But with a little bit of patience and the right brokers, you can sort of mitigate. You can mitigate some of those challenges.
Yeah, they do I wouldn't say a lot, but it's done. I've seen before where to avoid a step up in property taxes. So if someone's owned it in the corporation, they sell the corporation. If it's been known and that property's been owned in there 10 plus years, let's say, and they haven't really reassessed the property taxes at the true value, especially from 2008, 12 years later, 11 years later to where we are now. So they'll sell that, which is a very complicated thing. And I don't suggest anyone to take that on if they don't know what they're doing, but that's kind of an idea that people have of doing that. So it's very interesting. But
that was, I think that was really prevalent before the Great Recession. Yeah. And, what folks were doing, my understanding was that instead of selling the property, they just drop it in LLC. And then the next day they transfer the LLC.
Yeah.
So what the Florida Department of Revenue did a couple years ago, I guess they had some downtime during the recession, so they corrected the tax rules. Now there's a 3-year period. So if the LLC or the entity, the corporation, whatever it is, if it's owning the real estate for 3 years, then there's no dock stamps on the transfer. Now for property taxes, that's a whole nother ball of wax, but really dock stamps was the tax that these folks
Interesting.
were.
I want to transition a little bit, James, into foreign investors, because you work with a lot of non-U.S. entity or a lot of U.S. non-U.S. Investors with their own U.S. entities, and you're a member of a, I guess you'd say, an organization or association called IR Global, and it's very interesting. Can you explain a little bit more about that?
Today, I've been a member for, I'd say 5 or 6 years, and I'd say about the organization's based out of Europe, London specifically, but about a third of the membership comes from Europe. About a third of the membership comes from North America, and then the remaining third is kind of spread out across Asia and South America and Africa and the Middle East. So it's really a phenomenal group. I use it all the time now. I mean, I've constantly got things coming up where, someone is, getting a referral from someone. Hey, you're working on a business transaction. It's not even Florida sometimes. Sometimes now it's the United States, because, for certain things like U.S. tax, you don't need your attorney to be anywhere in particular, because the U.S. tax system is, applicable all through the entire United States. But it's been a great group, and I've been spending a lot of time in South America the last couple of years. My wife is from Ecuador, so another kind of reason that I was interested in the group was, it kind of gives me a lot of exposure to that market. Whereas, even though I'm in Florida and we do have a lot of people who are coming from South America and Central America that are, putting money here, or they're moving here or whatever, the organization just gives me greater exposure to that market as well.
Yeah. So when you have foreign investors that are coming in, say they want to invest into real estate, and what are the first few steps? How do you guide them? And they say they just want to buy something, like say an apartment building or a commercial property in the United States. What are the first few steps that you do to get them set up for that process to do that?
Yeah. Well, it really depends on the investor, right? Because some investors are very savvy, and I'll begin by sort of explaining the ABCs of anything. If it's getting the bank account set up or the LLC or whatever, and they'll say, "Hey, James, it's okay. Believe me, I know all this. I've been investing in the United States for 25 years or something, And so, you know what I mean? There's a lot of foreign investors who have a lot of experience in the United States. They may have accountants, they may have banking relationships, they may have attorneys, and I might just be getting the call because, the deal's in Florida.
Right.
They want somebody in Florida, or their existing counselor, is unavailable.
What happens if it was like their first time investing? Would you have to go through the whole process of obtaining an ITIN and the whole 9 yards from there?
Yeah.
And now
on the other end of the spectrum is, somebody who has very little experience. Now, that person's harder, right? Because they don't really understand how the U.S. market works. So if I say something like, I walk them through maybe 30, 40, 50 minutes of, this is what's going to be involved, and the setting up an entity and the tax and whatever. And, all this stuff is so time consuming, trying to really understand how even how opening bank accounts work, or getting an ITIN, or, basic tax stuff, or a real estate contract, sort of customs and traditions for, what you should expect in a real estate contract, or like an M&A deal. And then I say, so that right there, that's daunting. And then 2, when I ask for my retainer, which is, it's a reasonable amount for people that are familiar with the market. If I say, okay, well, you should probably give me like a $5,000 retainer so we can, start off, and, that should get us through most of the deal or whatever, and they have no idea. They're
Right.
coming from a country where, attorneys are not trusted, and they're, they don't have that trust level with attorneys. So they're really not sure. So it's really hard working with folks who lack that background. My clients tend to be more sophisticated people who are coming through IR Global, or they're getting referred to me through, sort of established, channels, real estate brokers, et cetera. And it's usually not their first deal.
Okay.
But you're right. In the beginning, and I've done it, you need to do everything. Okay. And even if, take that example that I gave you about the Canadian guy, okay, where we basically had a portfolio of real estate, and we did a disposition, but we had to transfer the company, not the real estate. Okay. There were nuances and intricacies of that deal that, I had to learn and work on, so, where I had another engagement a couple months ago, and one guy was from England, the partners. One guy was from Botswana, I think, and the other guy was from somewhere else. So it's, it's, even these guys are all sophisticated, right?
Yeah.
They're all sophisticated, but, the problem just got more complicated. So my clients tend to be more towards the sophisticated end of things. And then the less sophisticated folks, I just ask them, listen, you just got to trust me, and I'll walk you through it. But a lot of the basics don't change, the entity formation, if you need an ITIN, obviously that's a different process.
And that goes through much faster when working with an attorney versus them doing that themselves, obviously.
I can't imagine doing some of this stuff on your own, frankly.
Yeah.
I mean, I've got all the training and the education as a CPA, and, worked in public accounting, and I've worked as a tax preparer for over 10 years. I've got the law degree. I've worked in real estate transactions, M&A transactions, securities work, all this stuff. And, it still takes me hours sometimes to navigate through, IRS regulations, and to fill out the forms, and, to send everything in. The worst thing that can happen is, one of the worst things that can ever happen to somebody, okay, is you spend all this time working on something, and then you send it out, and then it gets sent back to you with a letter from the IRS that says, hey, you didn't really do this right. And believe me, the IRS doesn't write like some detailed letter. These are the things you need to fix and correct. They just say, sorry, you didn't fill the form out right. Please resubmit the form. So, for an unsophisticated person, I don't think that's the right way to go about it. I think spending a few $1,000s on getting some professionals involved, whether it's an attorney, I think in our email correspondence, you kind of asked me for some, kind of bullet points. And one of my biggest bullet points, and it's the advice that I'm happy to offer, is, you always have to build out your team. Yeah. Build out your team, have brokers, have business advisors, have CPAs, have bookkeepers, have property managers, have attorneys, have a transactional attorney, and have a litigation attorney. Yeah. Because sometimes you run into a business dispute, and I feel that I'm a pretty good resource for business advice, but you got breach of contract, or a counterparty that's defaulting on something, I'm not going to go and file a lawsuit for you. It's a totally separate skill set. So one of the most important things that a novice investor or a new foreign investor can do is build that team out. And believe me, the team is not just James Schmidt, and it's not just your broker. It's, a team of everybody.
Yeah. Especially when dealing with real estate, there's so many moving parts that go with that. Even if you're the broker or property manager, the whole 9 yards, because someone that's investing foreign is most likely not handling property management themselves or putting together that the employees themselves. So yeah, it's definitely, that's why people ask, and it's like, it's ITIM, you have to get the entity, but normally with larger investors that we deal with that come to us, they normally have all that stuff set up. And as you were saying, they're more sophisticated if they're already coming in. They already have some sort of setup, whether it's an LLC for something else they invested in, and then this is just something new. So they have some sort of knowledge of it. It's really just, for new investors that come in, might be their first investment with it, in the United States in real estate, to speak with someone and to go through the whole process, kind of give them a bullet list of what they have to do and, what it costs and put you on retainer and stuff like that. So.
Yeah. Now, for some of the more sophisticated people, they still have some challenges out there. They've got a big estate planning problem, right?
Mm-hmm.
If you're in the United States, if you're a U.S. taxpayer, and when you pass away, you have an exemption. I think it's seven. Is it $14 million now? Is it 14?
It's changed with Trump, right?
Yeah. I mean, it's massive. You have this huge. I'm not. I don't do a lot of the estate planning, but you have this huge exemption. You get this huge credit against tax. So, but if you're a non-U.S. taxpayer, it's $60,000. So let's say you for whatever reason you're older person or something tragic happens and you die owning a piece of U.S. real estate and it's worth $1 million. You're paying tax on $940,000, right? That's crazy. So, there's some sophisticated estate planning, things that we can do to minimize that, but it involves setting up multiple levels of partnerships. And, to the guy who's flinching at, putting up a $5,000 retainer, they're really flinching when you're telling them that, to get all this papered, it's going to cost 10 grand or something. They just literally, they can't believe it. They can't wrap their head around why it costs that much to produce just a bunch of paper, basically, and form some entities. And then the other thing that even the very sophisticated people have to deal with is sort of the discrepancies between how a transaction is treated for U.S. purposes and how a transaction is treated, in their home jurisdiction.
Right.
And that can be really, really time consuming. To spend time on those things. I can't become an expert on the tax system in the United Kingdom or the tax system in, France. Every time a transaction comes up, I have to go and spend hours researching the tax treaty and what's going to happen. And that's where this organization comes in very helpful, because I literally, just at my fingertips, I could have, experts in, any sort of Western or modern country, whatever you want to call it, first world country. I just go look and I've got lists of people that either handle tax work or transactional work or, deal with intangibles like patents, in all of the countries where, 99% of my clients who are non-US are coming from.
Yeah. It's always important that they have that counsel in their home country, no matter what they're doing. So for legal and then also for taxes, of course, especially with it being so easy with the IR Global. But so James, it's great to have you here. I want to know where can listeners learn more about you and your firm if they want to engage you?
The office phone number never changes. That's 813-250-3700. And the domain for the law firm is Schmidt Law Office. That's SCHMIDT lawoffice.com. I thought that was a short domain when I registered it 12 years ago. I realize now it is not a short domain, but it is what it is. But if you go to www.schmidtlawoffice.com, you'll get all the information. You'll get our address. You've got some other information about things we've worked on and specialties and all that kind of stuff. And my email address is jas@schmidtlawoffice.com.
Okay, perfect. Yeah, well, I'll put everything into the show notes and to the podcast and YouTube notes. And I want to thank you again for being on the show. It was awesome. And I look forward to connecting with you in the future.
Great. Thank you, Charles. It's been a pleasure.
Thanks. Have a great day.
You too.
Hi, guys. This is Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in investing in real estate and you don't know where to begin, set up a free 15-minute strategy call with me at schedulecharles.com. That's schedulecharles.com.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.